AMD just ripped 12% in a single week. NVIDIA is sitting on a $4.5 trillion empire. And Datadog, the company that monitors all that AI infrastructure, just got a major analyst upgrade. Today, we are breaking down 3 of the biggest AI infrastructure plays on the market right now. Are they buys, or is the hype running ahead of the numbers? Let us find out. Welcome to the Money Mind. Today we're doing a deep dive into AMD, NVIDIA, and Datadog, breaking down earnings, guidance, analyst targets, and what it all means for your portfolio. Let us get into it. First up, AMD. Advanced Micro Devices has been on an absolute tear this past week, surging nearly 13%. The stock is trading around $245, up from a 52-week low of about $84. That is almost a 3x move from the bottom. But here is the thing. It is still about 8% below its 52-week high of $267. So there is room to run, but it has also come a long way. Now let us talk numbers. AMD crushed it in Q4 2025. Revenue came in at $10.3 billion, beating the consensus estimate of $9.64 billion by a wide margin. Non-GAAP earnings per share hit a record $1.53, blowing past the 1.32 estimate. That is a nearly 16% earnings surprise. For the full year, AMD did $34.6 billion in revenue. The data center segment was the star, hitting a record $5.38 billion in Q4, up 39% year over year. Free cash flow hit a record $2.08 billion, up 91%. Those are not incremental improvements. That is step change growth. But the real headline is the partnerships. AMD announced a deal with OpenAI for a massive 6 gigawatt GPU deployment. The initial phase is a 1 gigawatt rollout of MI450 GPUs starting in the second half of 2026. On top of that, Oracle is building an AI supercluster using 50,000 AMD GPUs in Q3 2026. Think of it like this. AMD used to be the scrappy underdog in the chip game. Now the biggest AI companies in the world are writing them checks for billions of dollars in hardware. The market cap sits at about $400 billion, with a forward PE of around 29. That is actually reasonable for a company growing this fast. 37 analysts rated a buy, with a consensus target around $285, implying about 16% upside from here. Now let us talk about the 800-pound gorilla, NVIDIA. Trading at about $186, NVIDIA commands a market cap of $4.58 trillion. Let that sink in. That is trillion with a T. The 52-week range goes from a low of $95 to a high of $212. So like AMD, it has pulled back from the peak, sitting about 12% below its all-time high. NVIDIA's Q4 numbers are absolutely staggering. Revenue hit $68.1 billion for the quarter. That is up 73% year over year and 20% from the previous quarter. For the full fiscal year ending January 2026, total revenue was $215.9 billion, up 65% from the prior year. Non-GAAP earnings per share was 4.77 for the full year. Gross margins are sitting at a ridiculously healthy 75%. To put that in perspective, for every dollar NVIDIA earns, they keep 75 cents before operating expenses. That is the kind of margin you see in luxury goods, not semiconductor companies. The PE ratio is about 38.5, which is actually lower than its 12-month average of 45. So despite being the most valuable chip company on the planet, it has gotten cheaper relative to earnings. The bull case for NVIDIA is straightforward. They dominate the AI training market. The Blackwell architecture is ramping, data center spending shows no signs of slowing, and every major tech company on Earth is racing to build AI infrastructure. The consensus analyst target is about $265, with Goldman Sachs and Morgan Stanley at $250, Bank of America and Wedbush at $275, and Cantor Fitzgerald holding a street-high target of $300. That implies anywhere from 34 to 61% upside. The bear case, valuation compression if AI spending slows, potential competition from custom chips built by hyperscalers, and the simple math that growing 65% per year gets harder the bigger you get. Now for our third pick, Datadog. If AMD and NVIDIA are building the AI engine, Datadog is the dashboard on top. They provide observability and monitoring for cloud infrastructure, and they are increasingly becoming the go-to platform for companies running AI workloads. The stock is at about $110 today, up 4.5%. The 52-week range is $88 to $202, so it's sitting much closer to the bottom of that range than the top. Datadog's Q4 2025 results were solid. Revenue came in at $953 million, up 29% year over year, beating estimates by about 4%. Non-GAAP EPS was 59 cents, beating by 7%. They hit record bookings of $1.63 billion. For fiscal 2026, guidance calls for revenue between $4.06 and $4.1 billion, with EPS between 2.08 and 2.16. That guidance came in 4 to 5% above street consensus, which is a strong signal. Market cap is around $37 billion, and Guggenheim just upgraded the stock to buy with a $175 price target. The consensus target across 35 analysts is about $178, implying over 60% upside from current levels. That is a massive gap between where the stock is and where analysts think it should be. The catalyst here is the AI expansion. Datadog just launched Datadog Experiments, a product that embeds experimentation directly into observability. Think A/B testing meets real-time performance monitoring. They acquired a company called Eppo to power this. On top of that, as more companies deploy AI models, they need monitoring and observability tools to keep everything running. Datadog is positioned right in the middle of that trend. The risk? Software stocks have been in a brutal sell-off, and at $110, Datadog is down over 45% from its 52-week high. If the broader software market stays weak, even good fundamentals might not be enough to push the stock higher in the near term. So here's the verdict. Of these three, NVIDIA is the safest bet. It has the earnings, the margins, and the market dominance. But at $4.5 trillion, the easy money might already be made. AMD is the most exciting. The OpenAI and Oracle partnerships are game changers. The valuation is reasonable at a forward PE of 29, and the stock has serious momentum. If you believe in the AI build-out continuing, AMD might give you the best risk-reward here. Datadog is the deep value play, down 45% from highs with analysts targeting 60% upside. That is a big bet on the software rebound. If you have a longer time horizon, it could pay off big. But for my money, I would be watching AMD most closely right now. The partnerships, the earnings growth, and the momentum make it the strongest story of the three. This is not financial advice. Always do your own research before investing. If you found this helpful, hit subscribe and check out our other deep dives. I am the Money Mind. Let us keep building.